We have more evidence this morning of the damage this pandemic is doing to our economy. The U.S. economy contracted by 4.8% in the first quarter. It is the sharpest pace since the Great Recession, but it just pales in comparison to forecasts for the second quarter, where the worst estimate is for a 65% pace of contraction. We've got Emily McCormick with us this morning to break down this report. Good morning, Emily.
Good morning, Alexis. And yes, this was a very dismal first quarter report on U.S. gross domestic product. We had that number turning negative for the first time since 2014, and that drop was the most since late 2008 in the first 3 months of this year. So it's worth repeating that headline number. We had first quarter GDP on an annualized quarter-over-quarter basis declining 4.8%. That was worse than the just 4% drop expected. And we did have a rise of 2.1% in the fourth quarter of 2019. For personal consumption, remember that the consumer spending aspect is 2/3 of economic activity. That was at negative 7.6% for the first quarter, also much steeper than the decline of 3.6% expected. This was also the fastest drop in personal consumption that we've seen since 1980 and double the rate of the worst point during the global financial crisis. Also want to point out that we had services consumption shrinking 10.2% in the first quarter over the prior period. This was the deepest contraction we've seen of this metric on record, and household consumption overall for services deducted 5.6 percentage points to that headline GDP figure. Looking at other areas of the economy, we also saw business fixed investment dropping 8.6% in the first quarter. That was the most since 2009 as companies pulled back some of their spending plans as this pandemic forced business closures and demand to fall during the period. A couple of more positive aspects in this report. We did see residential investment, net exports, and government spending slightly positive and adding modest gains to the headline print, but these were not enough to counterbalance that sharp decline that we saw elsewhere in the economy. This is what the Bureau of Economic Analysis had to say in a statement with today's report. They said, quote, "The decline in first quarter GDP was in part due to the response to the spread of COVID-19 as governments issued stay-at-home orders in March. This led to rapid changes in demand as businesses and schools switched to remote work or canceled operations, and consumers canceled, restricted, or redirected their spending." So again, economists are expecting this contraction to deepen in the second quarter with these stay-at-home measures broadening out starting in April. That's something that we'll have to see coming, but for now, already seeing negative GDP growth for the first quarter. Alexis?
All right, not unexpected. Emily McCormick, thanks for that.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.